Oh, you know our viewers, Peter. So let me ask you, what should financial statement preparers, whether it's under IFRS or GAAP, be doing right now?
I think they're reasonably close, but I think it's not the transition that's going to make the difference. It's the substantive difference in the standards. After one gets over the cash flow differences, which I consider to be the big deal, I think I'm not going to say the rest are trivial, but I don't think they're quite of the same consequences. There is going to be, as I said, some impact on ratios that particularly affect lending. And if you've got debt covenants, those are the ones that I'd be thinking of way in advance, particularly if you got a chance to amend or adopt or renegotiate or let an option expire. An option that you might have said, well, actually, I'm pretty certain I'm going to take that renewal option. But now when you look at the financial statement consequences, you're thinking, well, you know, this may not be as good a deal as we originally thought. And funding it with a different mix of debt and equity is going to give a different dynamic profile to our ratios. And it may change our current ratios and may be a little more copacetic with our covenants. And one of the things the IASB has done is allowed enterprises that are implementing it to simply start at the beginning of the year and capitalize all the leases that are present on their balance sheets and not recast the prior year's numbers, which is going to make for one-time changes due to accounting principle changes in the year-to-year results. Those year-to-year results, particularly in cash flows, may suggest that the company has had some watermark event, their watershed event that has significantly increased their operating cash flows when in fact it's just a reclass. There's some strategic thinking that has to go on there because going backward to apply the standard means you would go back into a high interest rate era where the discounted cash flows may end up to be different and the interest expense different than it would be under the one-time change approach, which is allowed at least under the IASB standard. So I think the important part for both preparers under IFRS and under FASB is thinking ahead of what you're going to do in the next couple of years before the implementation of the standard so that you can take all those steps that you could make to make the best result when you do change. So I don't really think it matters too much about the standard. What I think matters is what you're going to do between now and then.